All right, guys, welcome to the last video, the systems video, right? So today we're going to tie everything together and complete our entire system. We're going to follow the full flow, right? Determine our high time frame bias, marking out our areas of liquidity, incorporating the sessions, the times, waiting for the sweeps, waiting for that breaker structure and fair value gaps to stack. We're going to talk about our entrances based on retracement, placing our stop losses, placing our targets, right? All that's going to get covered right here. And how we're going to do it exactly is we are just going to run through 2 exact days, right? So I want to run through 2 exact days and everything that happened within those days, right? And how we were able to come to those conclusions. Then I'm going to mention the do's and don'ts, some things that you need to key takeaways from, what happened and how to pretty much recreate these whenever market does present our model, which is that breaker block stack on a fair value gap, and exactly how to just act on those trades. Okay, so let's just go ahead and get started. We're going to start with Tuesday, May 5th. Okay, so we're going to talk about everything, full walkthrough from when I get on the charts to how I take the trade and to how you need to be thinking about looking to take these trades as well. So step 1, we come to the day. We're going to start off on our higher time frames like always. We always start off on our 4 and our 1. So I'm on a 4 hour, right? Let's imagine everything to the right of this does not exist. Okay, so all we see right now is price pushing higher. We can draw some key things, right? We can see liquidity point right here. We can see liquidity right there because it rests at all these highs and lows. Okay, so let's see what's going to actually happen. 4 hour isn't really showing us much when it comes to just overall, what's happening. Like, yeah, we have this liquidity, but we're going to drop into lower time frames. See if it's even getting played in within our session. So for that, we're going to use this 1 hour chart. So let's go and take a look at the 1 hour. So as you can see, the liquidity point that we drew lines up perfectly with previous daily highs. So I know you see that it lines up perfectly with the previous daily highs. That's why I gave you this indicator, right? A lot of these things are going to be pre-drawn out for you, right? Which is perfect because then now you can just act upon what you see instead of trying to waste time or waste effort to draw things out. So that lines up perfectly. So I'm just going to go ahead and delete that because we already have the previous daily high drawn out for us. Okay, cool. So we're on the 1 hour. What are we seeing on the 1 hour? Coming into this Tuesday, we have London lows untouched. We have Asia lows and London lows both untouched on NQ. We have this previous daily high that gets grabbed at 8 a.m., right? You can see this 8 a.m. candle right there. It takes out that previous daily high. Remember, our session is opening at 9:30, and you make sure you've already gotten your charts fully set up with all the other videos, knowing what time frames and what time your market session actually opens, and everything's already fully aligned, right? So in this case, we've already taken previous daily high at 8 o'clock. So we're not really paying too much attention to that, right? Because within our session, within our trading times, that's not happening. This has already happened outside of our trading times. Okay. And now what else are we doing? We're also correlating pairs, remember? So we're using pairs to also find our bias, right? So what is our directional bias? One more time, session liquidity into either a high time frame gap or into the Judas swing, right? So we're looking into it right here. What do we currently have? So we hit this outside of our session, right? And there is no high time frame gap, right? Because obviously it's a gap looking for sells because we're hitting a high point. So we're hitting a high point of liquidity. We want a high time frame gap to give us sells. If we're hitting low points in liquidity, so we're taking out lows, right? Because you can see we took out a high, we would look for a high time frame gap like a sell, and there's clearly nothing over here, right? And if we're taking out lows, we want a high time frame gap that's a buy, right? So a bullish high time frame gap, for example, right? We do have some fair value gaps that exist like right here and right here, right? So ideally, if we had gotten something that looks like this, price coming down, right, hits this London low while entering this gap right here, we would be then looking for this type of trade, right? So let's keep that in mind. Let's make sure we're practicing our directional biases, practicing when to know where price wants to go, right? And using these liquidity levels to our advantages as well, right? So as we can see right here, the only thing we hit coming into the market open was this previous daily high, and that already happens before our session. All we can do now to keep finding our directional bias is to correlate our other 3 pairs. So we're going to go to the ES. That's actually where I drew this at. So I was looking for that earlier. But when we go to ES, what do we see? the previous daily high for ES exists and doesn't get hit until our session. So boom, we're inside of our window, right? Remember our windows? We're inside of our window and we hit the previous daily high. Okay, cool. So NQ didn't do it, but ES hit our previous daily high within our session. What do we look for now? Okay, session liquidity has been attained, right? Within our phase 1, phase 2, session liquidity, the major one, has been obtained. Now we look for a high time frame gap or a Judas swing, right? Okay, so session liquidity hit, high time frame gap. We're starting to look left. Do we have any high time frame fair value gaps, right? Remember the fair value gap video, trying to draw it out, 3 candle sequence. Nope, we have no fair value gaps that are stacking this previous daily high from this Tuesday. Okay, so what else do we have, right? So it's hard to see on these higher time frames. So let's go ahead and just drop down a little bit. We know we hit this previous daily high. Now we just want to confirm either a high time frame gap or a Judas swing to give us our direction. So let's drop to like the 15. So on the 15 minute, what do we have? Okay, great. So we went ahead and hit that previous daily high. And what else can we see? We can see that we are above the New York session open and the midnight open, which then gives us the confirmation for sells. Okay, so this is giving us sell direction, sell directional bias, right? And guys, you got to remember, everything you do in trading is understanding and mastering the concept of what you're doing, right? What the actual charts do is not in your control. You're not here to make the charts do anything. You're here to understand the concepts and follow the concepts and follow the system that's laid out for you, right? So as you can see in this, you can probably tell where this is going. We're going to end up taking some form of sells right here, but obviously price looks still like it's going up, right? So look, and how can we make money when price is going up, but we want to sell? Is by following what we're actually supposed to do, right? Because these have their reasons, and there is a reason for price actually selling within here, and you just need to follow the system so you can be a part of that reason, okay? So boom, what do we get? Previous daily high swept, above the New York session open, above the midnight open. What does that mean? Okay, phase 1 is now complete, right? Session liquidity, Judas swing, perfect. So that's completed. Now what do? We're going to drop into our lower time frames. So we've gotten ourselves our direction with our phase 1. We're going to drop into lower time frames, preferably 5 and down. So here comes your first little key takeaway. We are taking our trades on the 5-minute chart and below, right? This is what is optimal for this system, especially in the day trading situation. We are taking our trades on the 5 and low, okay? So cool. So we've looked at that. We've seen it happen. Now we're on the 5-minute, right? And this is how this is actually going to work. 5 and below doesn't mean we're sitting on the 5-minute waiting for a trade on the 5. It means that we're cycling through the 5, the 3, the 2, and the 1 to find a setup, right? Okay, cool. So this is our 5, right? Preferably start at the 1, right? 5 and below, but start at the 1 and cycle upwards to find a setup. Because if you're going to get a setup on the 1 minute, it's going to appear and show up and take place before the 5-minute even happens, because it's going to take 5 1-minute candles to print a 5-minute candle. Okay, so 5 1-minute candles is going to be 1 5-minute candle. Okay, so let's go to the 1 minute. Okay, cool. So within our 1 minute, what do we start looking for? We start looking for our breaker block and fair value gap to stack, which is the criterias for our phase 2. So hopefully you've already gotten it by now, but I'm going to reiterate our model. The model that we are trading is a breaker stacked on a fair value gap. So breaker fair value gap stack is our trader, is our model. Okay. So let's look at ES. So within ES, what are we seeing? By the way, guys, like I mentioned, make sure you have both charts up. Okay, so let me just quickly show you how to do it. You can either do that and press Alt and Enter, and it'll open a new one, right? And then you can set this chart to NQ. Okay, so I don't know why it's not already pre-changed colors and whatever, but you can set this chart to NQ. Then you can pull this out, and you can, or actually no, left click on this and you can add split new view and not new view. Okay, cool. So you can add this and you can add split view. We're trying to split this view. There we go. So click the first one and we want to split the view between this and the other one. So this is actually how we are taking these trades, guys. This is the key takeaway number 2, right? You have these both up. That way you don't have to cycle too much between both of them, because now you have them both up and you can already see what's happening. So right here, we're just going to go ahead and drop to that May 5th. Okay. And if you want to wonder how I got my charts the way they are, let's just do it real quick because I don't like the charts being just like this. These are some things I like to have on my chart. When it comes to my canvas, I want to make sure that there's no grid lines. When it comes to the symbol, I like to make the borders all black as well as the wicks. That way the stuff is more pronounced when you are looking at it on the chart. Okay, so just like that. So let's go ahead and just take this to the 930 open. That way we're all on the same page. Okay, perfect. So just like this, now we've obtained our split view. Now, this is also important for another reason. Remember, we only execute our trades on one pair, preferably NQ. So we're trading the NQ pair, but we need to look at the ES pair and the NQ pair and the YM pair, right? But if you only correlate ES and NQ, you could still be well off, right? Because it's still telling you the direction of price and it's still giving you that future foresight. But obviously, correlating all three pairs is the optimal way to do it, right? I don't think you can open a third page. So what you will have to do is at least scroll through one page, right? One page where you're actively going through YM and NQ preferably. And then the other page, you're looking at ES, right? So the reason I like to have ES up on its own, key takeaway number 3, ES moves a lot cleaner than both of these pairs. So when it comes to just breaking structure and looking for actual entry, it's easier to find that on ES. That way we can then correlate it to NQ when we're taking our trades, okay? So let's keep going with this example that we're looking at right here, right? This is actually quite perfect because these are all just readily available and I can just go over an actual real life scenario. So we don't have to, scroll around looking for stuff, which makes it even more, better. But anyway, so cool. So within ES on that time period, let's also map out the macros for our trade on NQ that we're going to be taking, right? So 1110. Okay, great. So within that price action, what did we already identify? We already figured out our phase one, right? ES went ahead and swept that previous daily high while being above the 830 and the midnight open. Now we're on the 1 minute, cycling between the 1 minute through the 5 minute, trying to find our setup. But obviously we don't have to do too much cycling because here we are on the 1 minute where we present ourselves the trade opportunity that we were looking for, right? So I'm going to go ahead and make a little change to this indicator. I think it's time to officially remove the New York session open from the indicator. There we go. So like I said, all we really need on there is just Asia session and London session, right? So you can remove that. And remember, the less that's on your chart, guys, it's also better for you because it allows you to see things a lot cleaner. So breaker fair value gap is the model, the entry model for the situation. So what are we looking for? Here we have our highs, right? Every green and every red candle, these are highs. This is liquidity resting at every single high and every single low. So we're taking liquidity at these highs, right? Taking liquidity. We took liquidity, not this high. This high didn't take liquidity, right? So we took liquidity at this high, then we broke structure at the low right below it, right? So this is the sequence of the breaker, right? Sweep of liquidity, so up and down gets taken. Then the immediate low, right after the up and down. So up and down, down and up, right? You can already pre-see this, but this breaker doesn't exist until we actually close below this low. So up and a down, liquidity sweep, come back down, down and a up, break of structure. So once we close below this low, this down and a up, this breaker now exists, okay? And then we stack that with what? Our fair value gaps. So as we can see, we have a fair value gap right here from 1, 2, 3 candle sequence, right? Top of this candle, bottom of this candle, top of this candle, and that is stacking. So now we've gotten our breaker and fair value gap stack. Now we need to correlate it to NQ, right? So let's look between NQ. Where is our price action that is correlating? Because it's correlating based off of time and it's correlating based off of the structure. So right here. So step one, key takeaway number 1, the main correlation for the entry is going to be the fair value gap. So we have a 1013 fair value gap right here, and we have a 1013 fair value gap right here. So these two gaps exist at the exact same place. So that's even more reasons, and that is why we're actually taking this trade right here, right? But except for that, let's look at the other things that are correlating, right? So we also have a sweep of a high right here, and then we also have a break of a structure of the low right here. Okay, cool. So then what does that mean? This red candle right here is our what? You guessed it, right? So that red candle is our breaker. Okay. So that red candle is our breaker. And this is our correlated fair value gap between ES and NQ. So we take our trade within here, right? As you can see, we're not going to take the trade on ES. We're actually going to take the trade on NQ just to keep that consistency factor and trading one pair, taking one trade, trading one pair, trading one session. Okay. So let's go ahead and place our trade. Next thing we're going to look at within this trade placement is going to be some more key takeaways. Okay. So step one, when it comes to drawing out our breaker, okay, so these are going to be hard to show you. You just have to listen to the concepts I'm telling you and apply them when you see them, right? Because you're going to need that experience as well. You do not want a mitigated breaker. You do not want a mitigated fair value gaps. We've already talked about mitigated fair value gaps, right, in the fair value gap video. And simply means we don't want to take trades from gaps that have already been used or gaps that have been closed above, right? And that is within taking a trade, right? And I'm going to explain that here because obviously you can see that this candle closes, this green candle closes above this fair value gap, but I'll explain to you why this doesn't matter, right? But just remember the rule of thumb. We don't want to take trades from mitigated fair value gaps. We don't want to take trades from mitigated breakers, right? Okay, cool. So what is an example of a mitigated breaker? So a mitigated breaker would be one like this one, right? So let's clear this one out. Let's go through this one as an example. So as we can see right here, we also have a high, right? Liquidity rests at every single high. It doesn't have to look like this, look like this. It can look like this. It can look like this. Every single green and a red is a high. So we went ahead and took liquidity at this high, this green and up. Then the immediate low down in a green, red and a green candle is our immediate low. And we broke that structure with this candle right here, closing below it. Now, here comes the issue. When we draw out this block right here, this block exactly, not both of them, but this block in specific is now getting mitigated, right? It's getting used. And watch this. This is how it's getting used. We are closing below this, creating this breaker. So this candle is making this breaker, right? Look at this candle. Remember what we talked about with open, high, low, close of a candle. This candle pushes into the breaker and then displaces to the most recent liquidity or the most lowest point of this breaker. So this will count as a mitigation because we are already using this breaker and pushing down. So we do not want to use the breaker and push down because then this breaker right here exactly is no longer valid. But look at this breaker, right? Instead, we have this breaker right here, which is still within the same area and it's engulfing our other breaker, right? It's encasing this other breaker right here. But then let's look at this breaker, right? So this is the candle that forms the breaker when it closes below, right? When we close below this low is when this breaker actually exists. Now, with this breaker right here, we do not retrace this breaker until our actual entry. Do you see that? So the next point in which we're touching this breaker is us right before we take our entry, and then price displaces to the area of liquidity. Does that make sense? So that is the difference between a mitigated breaker and a non-mitigated breaker. Watch this segment as many times as you need to so it makes sense. This obviously applies in both directions. This is a sell direction, but if things were flipped around, it would apply there, right? And if you're confused, it's because you're not practicing enough, right? You got to make sure you're also going into your trading view and you're drawing these things out yourself, drawing out sell breakers, drawing out buy breakers. Because guess what? By the time you tax your brain a little bit and you do a little bit more figuring it out, this will make more sense. And you should be able to apply this to both directions. I don't have to show you both a green and I don't have to show you both a buying and a selling example for you to understand the actual concept of what I'm saying, right? Because showing you things is all well and dandy. I can show you how to pick up a box, right? But not every box is going to be the same size, the same weight box that I showed you. But if I teach you the concept of how to pick up a box, on how to leverage the weight, on how to get a box up, every box now you're able to pick up because you have the idea, you have the concept on how to pick up the box. And I'm not showing you an exact simple box, okay? So you do have to make sure you're doing your assignment, you're going into your charts, you're drawing these things up, and you're actually seeing these things that I'm showing you in real time, okay? So that is the difference between a mitigated breaker, this one that got closed below right there, price hits it, comes back down, and this one that's non-mitigated because we're closing below, and the next time we retrace that breaker is us entering our entry, right? Okay, cool. So let's play that into what we're talking about right here. So we've already understood mitigated breakers. Now let's look at the mitigated fair value gaps that I was talking about, right? We don't want fair value gaps that are getting closed through, and we don't want ones that are already used. So as you can see, this fair value gap is getting used once. And the one time it's getting used is the trade that we're taking. Okay. And then this fair value gap right here is the correlation of ES. Now, if you were already paying attention to everything I was saying, you would already know, I've mentioned this before, ES has cleaner price action. So we're not worried about this inverse gap, right? For two reasons. One, ES has cleaner price action, but two, we also already have the direction of our trade. Remember, that's why phase one is very important. So if our trade direction is telling us that price wants to go down, we're not going to worry about a 1 minute candle inversing. We're not worried about that. Plus our entries, which is what I want to show you next, is going to dictate when we enter a trade. We enter a trade in the pullback. We enter a trade in the heat. Okay. What does that mean? So we already know our target for this fair value gap right here will be this liquidity point. Our stop losses are going to go like this, guys. I'm going to give you the stop loss sequence right now. Your stop loss goes at the top of the third candle of your fair value gap. So right here, our stop loss is supposed to go right here, right? But there is an exception to stop losses, right? Look right here. 1, 2, 3, the third candle, right, of the fair value gap. Our stop loss is going right there, right, at the top of that third candle. Now, what is the exception? The exception is if that third candle exists within the breaker, because you got to think about it. We wouldn't want to get stopped out while we're still in the presence of a confluence that's supposed to take us lower. So if our stop loss exists within the breaker, then we move our stop loss to the next highest point. Okay. Just like that. Right. So if our stop loss exists within the breaker, then we move our stop loss to a high, a up and a down. And if obviously if the things are flipped, if we're in a buying situation, then it will put the stop loss at a low if it exists within our breaker. Okay. So cool. So that's step one. We know where our targets are. We know where we put our stop losses are, right? The next thing is actually entering this trade. We're not going to be entering once price hits the fair value gap because what we want is a 1 to 1.5 risk to reward. Okay. So we're going to enter at wherever inside this fair value gap gives us a 1 to 1.5. So step one is to place your tool, find your target, find your exit, and then your actual entry will be wherever you get a 1 to 1.5 at. Okay. Does that make sense? So that is how you dictate where to actually enter the trade, right? We're playing within this fair value gap. This is giving us an optimum entry, right? So now we're able to take a trade for an optimum entry just like that, right? Cool. Next steps. Even though I'm pretty sure this trade actually had the stops above there, I think it's because this is NQ1 compared to MNQ. So MNQ is the micro contract version of NQ1. Remember what I told you about managing your risk. Make sure you're doing your research upon that, right? So NQ is single contracts. MNQ is micro contracts, right? So you want to make sure mostly trade. You should be trading MNQ. You should be trading MNQ. So you should do your calculations based off of MNQ. And their price action and price structure can vary just a tad bit, but they're overall doing the same thing. That's why this kind of looks odd compared to that video, the execution video that I sent you. That I think I'm just gonna go ahead and play again, just so you can see it. But yeah, just gonna go ahead and play it again. So here's the execution video right here. Right, let's look at it to make sure everything aligns. Right, we can see we have this highs right there. We have the price chopping. This is the actual execution for this trade. Okay, and I got in right around there. So my stops were actually at these highs right there. Oh, let's get the video back up. Okay, cool. There we go. So let's play that back a little bit. As you can see, price is chopping around. I just moved that again. My bad. So my actual execution was all the way up there. But you get the gist, 1 to 1.5 in relations to our stop loss. So that is the execution. This was the execution for this trade. Very quick 1 minute trade. We get out of volume. We're inside of our session. We're inside of a part of our trading where we should be expecting volume. So this is expected. 1 minute trade. We make our money. We're done for the day. One pair, one trade, one session. Remember that. Okay. So that's that trade. That's everything that enveloped this trade all the way from our phase one. Right. So everything that took place in taking that trade all the way from our phase one direction, right? Session liquidity to our Judah swing because we didn't have a high time frame gap, all the way to the execution, the breaker stacking with the fair value gap. Okay. Great. So next, let's go ahead and jump into our second trade example, right? The one that we took on May, is it 8th? Should be the 8th. Yep. Great. So let's jump to May 8th and break that down fully as well. Then I'm just going to read out some key notes and takeaways from my journal as well as a little extra to y'all. Things that I've noticed over the years from my experience that will help you out. So make sure you write them down when I get to that. It's going to give you a lot more information. It's going to give you a lot of experience to just start off with. That way you don't have to just, formulate your own experience from the jump, because obviously that's going to be time consuming, right? But let's go ahead and just take our jump into the next trade that we're looking for, right? So right here, we have the 8th, right? Which was Friday, right around there. Same thing. We're on this 4 hour to start. Notice how I have both charts pulled up, right? So we're on the 4 hour to start. What are we looking at? So we have a up followed by a down. This is an area of liquidity, right? We could draw it. We couldn't draw it, depending on what our indicator is going to show us, because it's probably going to be pre-drawn, right? So this is what we have right there. Upon NQ, we only liquidity point we have is down here. That's already been ran well before our session, right? Let's take a look at YM just to see what it's doing. Okay, so YM is doing something different, right? Coming into there, we have a liquidity point right here, but it's not yet touched, right? We also have another one right there. This is 10 o'clock, that PL3. So this gets formed a little bit after market starts, opening. We could draw it out, but price isn't doing anything with it. But what is something we do notice? We have a high time frame gap that we are currently in. So imagine this coming into session. Look how everything I've been teaching so far is playing into each other, right? Coming into market, which means these two candles didn't exist. Look at this. We are inside of a high time frame gap. Price is hitting it and it's currently delivering to our next area of liquidity. So this is just real time showing that price loves to run imbalances and target liquidity. But let's break it down even further, right? Because that's what we're here to do, is to trade that actual time period within our session. So breaking it down even further, I don't have the indicator on here. So let's go ahead and add that. CT kill zones and pivots, TFO. Okay, great. Let's take out this New York session because we don't want that on there. Cool. All right, so boom, this is our hourly. Let's go ahead and drop into the hour on ES as well. And what do we see? So that point that I told you about, yet again, what did I say? Already drawn on our chart, previous daily highs, right? So it's already existing on our chart. Okay, cool. But let's pay attention to where it gets ran. Previous daily highs get ran on at 8 o'clock, 8 a.m. What would we be looking for at that point? Or not previous daily highs, London highs, right? And previous daily highs. Okay, so yeah. So previous daily highs and London highs are actually stacking on ES at around the same time, right? Let's drop it to a semi-lower time frame so we can see the actual open. So we're hitting that at what, 8:30, right? We're currently above New York session open as well as the midnight open, right? So we're above these two. But what is our issues, right? What issues do we have looking at this? This is not our time frame, right? We're actively looking to take trades at what? The 950. This is why this filters out a lot of bad setups and a lot of setups that also could not take place. But we're looking to take trades at what? The 950 to our 1110. That is just stuff that's happening before that, right? And you would also know at the point of hitting this previous daily high and London session high, this New York session time hasn't even formed yet. New York session hasn't opened, right? It's happening right here at the 8:30. Our session is going to open at the 9:30, which means this isn't even there. So we can't even use a Judas swing because this hasn't already populated yet. So let's make sure we keep that in mind. Okay, cool. So within our session, what is actually happening, right? We're going to be looking at all our pairs. Right now, ES and NQ are doing practically the same thing. They're pretty much just buying bullish motion, right? Okay, so we got that in mind. So we're looking at YM as well. And what do we see on YM? Oh, look at that. At the 9:30, at the 10, right, we're running through London session lows and Asia session lows. So we're taking session liquidity. Okay, cool. Back to our chart, right? That's what it's all about. Correlating the concepts with what we know. So we're taking session liquidity on these pairs that are all correlating. They're all doing the same thing, which means we can use each pair to figure out what the other pair is doing as well. Session liquidity has gone grabbed on YM. What are our two options? High time frame gap and Judas swing, right? Okay, cool. So within YM on this 1 hour, we have what? We already have a mitigated gap. Let's draw that out, right? So we know it's mitigated. Why is this not clicking? Okay, so we have a gap, but what happens? The gap is already mitigated. So this does not count as the type of gap that we're using to find our direction. Why? Because price goes up, comes back into it, then takes out that high. This all happens within London session or Asia session. So we're not using this as anything. We're not worried about that, right? Okay, cool. Then us taking out these sessions, do we have any other gaps? No, so we don't have high time frame gaps. Okay, that's fine. So we cannot use high time frame gaps with our session liquidity right here. Now let's drop to our Judas swings, right? Judas swings, like I told you in the video, are primarily between NQ and ES, okay? So we want to see those on NQ and ES. We don't really look at Judas swing on YM, but you could, but it's not back tested yet. So I wouldn't advise you do it, but I'm pretty sure it would work the same. But I don't advise you doing it just because it's not back tested. Remember, everything we do, we want it to be back tested, and we want it to be backed up by data. Okay, so cool. We don't have that. Okay, let's drop down. So which means currently we have no direction. And what I like to do, so key takeaway number 3 or 4 or whatever we're on, what I like to do is when we don't have a direction, I like to sit on the 5-minute chart. Because what the 5-minute chart tends to do is it's the earliest chart in which we can find something called an SMT. It's the correlation between ES, NQ, YM. It's price taking out lows or highs on one pair and not doing that on the other pair, which is going to signify the direction that market kind of wants to go as well. So it's kind of like a mini version of our phase 1, but it only plays a role when we have no other form of direction. Okay, so I'm going to write this down because we need to make sure we understand this, right? So we have one more form of phase 3, which is going to be SMT. It's also a minor form, right? So we have minor, minor, major, a minor form of SMT. And this is going to play a role when there is no current direction. Okay, so if we do not have a current direction in market, then we can start looking for lower level SMTs on the 5-minute and going up, right? And use that as our direction. So a quick breakaway of what SMTs even look like and how they even work and how we even look for them in the first place. This is an example of a bullish SMT, right? Bullish SMT meaning SMT causing us to want to buy, right? So let's take an example. Let's say ES was doing this, right? Boom, boom, takes this low out, right? And then NQ was doing something like this. Boom, 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 boom. This will be where we draw SMTs because we are taking out this low, right? This low is getting taken out on ES while this exact same low is not being taken out on NQ. So this would be our SMT. It's happening at the bottom of price, meaning it's inducing bullish direction. We want to take buys from that, right? And the opposite will be true for sells, right? So boom, 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 right? We are taking these highs, but we are not taking these highs, right? Assuming or inducing sell SMTs, meaning we want this type of direction, okay? So this is how today's trade actually gets played along, right? So one more thing, key takeaway. Make sure you're writing these key takeaways in a section. So have a section for key takeaways, right? Key takeaway, when we hit session liquidity and we don't have a high time frame gap and don't have a direction, it's perfect for a reset, something I call a reset. If we hit session liquidity and we don't have either a Judas swing or a high time frame gap, I like to call that a reset, which means at that point, you can already assume that we no longer have any form of directions, whether ones that you've seen before, whether one that you missed. Either way, if you missed it, if you didn't miss it, if you've seen one, if you didn't see one, once you hit a session liquidity and you don't have high time frame gap or a Judas swing, it's going to count as a reset. Okay, so with that being said, we're going to assume, or we're not going to assume, we know that YM does what? It hits Asia session low right here, right? Let's also find our time period for YM. 9:50, 11:10. So what do we do right here? So this is our active trading zone. We hit the London session low on YM. So at that point, we're going to reset our entire playing field, right? Okay, cool. So everything's reset. What can we then look for? We can look for SMTs. We can look for the draw on liquidity. We can look for all these other things. We can also just wait for another session to get grabbed. But obviously, we know in this case, what do we actually have? We are taking liquidity. So look, this is a low, down and an up. Every single down and an up is a low, right? So these are two lows, right? And look at how these lows play a part. And then look at YM, two more lows. Look at how these lows play a part, right? So these lows are running each other while this does not run this low, right? What is that? Simply our picture of SMTs inducing what? Bullish direction. So we're looking for bullish directions because of the SMTs that we have. So now we no longer need YM because we've already found our direction using its sweeping liquidity as well as an SMT. Then we can do what? Let's go back to our NQ chart, which is where we take trades on. We only take trades on what? NQ, right? Okay, so back to our NQ chart. What's the next thing we can do? We need to correlate what we're seeing on ES and YM to our NQ chart where we're actually going to take the trade from, right? So we know we have a direction already, which is buys, right? Let's go right here. We can also see that NQ is just following the same SMT pattern as ES, right? It's taking the low while YM didn't take the low. Cool. We already knew that though, right? So, okay. Now let's start dropping, right? We're cycling through our 5 and under, looking for an actual trade because we've already found our phase one. We already know our direction, right? Okay. So let's drop down. Let's start by, and by the way, obviously you're going to have to get quicker at this, right? Because these are going to happen quickly. So the faster you start practicing this and looking at it on charts, the faster you will be able to recognize it in the real markets, right? But what do we have? Simply, SMT is already found. That's what this SMT is. So this doesn't exist on this 1 minute. It's on that 5 minute, right? And by the way, key takeaway again, so we don't forget, SMTs only form after the high or after the low has fully formed. That is very, very important. It needs to fully form. And what does it mean for it to fully form? It means that price needs to close. So this is already formed, obviously. So coming into this, let's say we had this candle and let's say this green candle still had a timer on it. We have to wait for this green candle to fully close for this to then be an SMT. So this low has to fully exist. This low has to also fully exist, which means this candle needs to close. This candle needs to open for this to then be an SMT for whatever time frame it is, 5 minutes, 15, 1 hour. That's the rules of SMT. You got to wait for that low to actually form. Okay. Now that we got that down, we're back into our 1 minute. Okay, cool. So let's correlate what we're seeing. So what are we seeing? So we already have our direction, right? Let's look for our breaker fair value gap stack. So we have a down and an up right here getting taken out, right? We have another down and an up right here getting taken out. We have an up and a down right here also getting taken out. Now, the reason I'm showing you this is because we're paying attention to every single one of it, right? It's not like we're nitpicking. We're not choosing the one we want. We're just reacting off of the one that actually happens, right? So down and up, this gets taken out. So this liquidity point down here is getting taken out, right? Up and a down immediately is getting closed through, which means this candle right here is our breaker. So this is an existing breaker, right? But we also have this one, down and up getting taken, up and a down, getting closed through with this candle. Not this one, but this is the candle that's closing through this, which means this green candle is also our breaker. Now, if you watch the breaker video, which you better have watched, we could delete this one because it's obviously inside of a bigger breaker. We don't need multiple breakers that are engulfing each other, right? They're all going to do the same thing, induce price directions to the upside, right? Cool. So after that breaker, where are our fair value gaps, right? We have one right here. I know you can see that. This one gets closed through, but not even just that. It's not engulfing in our breaker, right? It's not within our breaker. But we have this one, which is, and we also have this one, which is also within our breaker, right? So this is what we're seeing, a possible trade on ES, right? But guess what? We're correlating this to NQ. We're not actually taking any trades on ES. So what do we see on NQ? Now, I'm going to do it in a reverse order because I'm going to show you what really matters. The first thing that really matters, okay, so key takeaway, you can have the breaker, you can have the market structure shift, which is the break of structure, right? We can have that on ES. We don't need it on NQ. The one thing that we do most definitely need is the correlated fair value gap, 1038 fair value gap, 1038 fair value gap on both these pairs. Okay? So we have the correlated fair value gap on both these pairs. We needed, or we had this market structure shift right here, or this break of structure, right? That created this breaker. But obviously we didn't break that structure right here. We're not going to regard this as an SMT because what did I say? SMTs only exist on what? The 5 minute and up. We're currently on the 1 minute looking for our trade. We're done with SMTs. We're not even looking for them anymore because we already have our direction, right? Okay, so we see we don't break structure right here, but that's fine. Key takeaway, you only need the break of structure. You only need the breaker on ES. It can exist on NQ as well, but you only need it on ES. The thing that you really need is that fair value gap to align time-wise and within the same area. So 1038 fair value gap. Okay, cool. So with that being said, we already know we have this. We know ES moves cleaner, right? And this is why we trade NQ, because although ES gave us the setup, moved cleaner, it didn't actually fall into an entry compared to NQ, right? What did I say about our entries? Step 1, place our TPs and SLs. So our take profit will be this low-hanging fruit, the high, right, for this fair value gap sequence. And our stops will be at the third candle of the fair value gap. So this is the bottom of it. So our stops would be right here. And then our job would be what? To look for a place in area or in price where we can get a 1 to 1.5. Now, another key takeaway. What do we see right here? We only have a 1 to 1.3 at the very bottom of the fair value gap. We cannot go any lower than that. We can't go any lower than the very bottom of the fair value gap. And this is the beauty of this, because look at this. This is a tick type of entry. We are getting in with literally no drawdown, and price is just running straight to our TP. This is what we want. This is great for our psychology. This is a great entry. Okay, so but what do we do about these numbers? It's very simple. Once we get anything above a 1 to 1, okay, which means if we can at least get a 1 to 1 within the fair value gap, at least, we can elongate our TP to a 1 to 1.5 to compensate for that. So this is the full trade. Remember what I just said. Play that back if you have to. This applies in both directions. I'm not going to show you both directions because that's going to allow you to have some free thinking of your own. And this video is running extremely long. Okay, so it goes in both directions. Everything we're doing is for both directions. You just need to be able to apply it in both directions because you're learning the concept of what I'm teaching you and you're not worried too much about what you're actually seeing, right? That is what it takes to trade. That's the skill part of it, is knowing what to do, right? So as you can see right here, we have this trade setup. Okay, cool. Let's correlate it again, right? So as you can see, the only difference is we don't have the breaker and we don't have the breaker structure on NQ, which is totally fine. We don't need it. ES is the cleaner pair. That's the one where we need all of this to exist on. We only need the correlated gap on NQ. Okay. Now let's go ahead and give that video a watch. All right. So this is the trade for this video. I've already showed it before, but we're going to show it again. I started the recording a little late, right? But as you can see, right, this is our entry on NQ. Started recording a little late, but it doesn't matter. It's just 2 candles pushing up. I'm out this trade in a minute, right? Max. And just like that, we're able to capitalize on a very quick and easy move that makes us $200 to $300 across all of our accounts. So you do the math on that, right? So this is what it takes to be able to just have the skill of trading, and then you're able to make money when you see the opportunities present themselves in the market, right? And that's that. I got out this position, right, on this account, but as we can see, it's clearly going to hit TP, right? And make sure we're holding our trades through. Don't do what I did over here. This happened because of a risk management issue. So I thought I had a certain amount of contracts on the trade, but it wasn't that much contracts. So there was no point holding it past that mark, right? Because I already had whatever I was looking for within the trade objective. But we are holding our trades through to TP and through to SL. We do not use break evens. As you can see, these trades are playing out so fast and they're going relatively in our direction, right? So we don't use break evens. There's no need for that. It actually will reduce the effectiveness of this system. So make sure you're letting it hit full TP, you're letting it hit full SL, and yeah, you're applying proper risk management when it comes to taking a trade, because that is very, very necessary. So just like that, we've correlated these pairs. We've correlated it even using YM. You will need to watch this video more than once. I'm letting you know this right now. You will need to watch this video more than once. You will need to take extraneous notes, and you need to go on your computer and practice these things out. That is the only way to succeed in this. Okay, great. So these two examples have been broken down from top to bottom, showing a buy setup and a sell setup, which is perfect. Everything just works out for me. I didn't have to scroll too much within the charts. And yeah, so you got to focus on consistency, guys. So while trading this, consistency is very, very important. Focus on the process. Focus on risk management. That's a very, very important part of this, right? You have the risk management class. Make sure you watch that video as well. These are A+ setups. Things that follow these two steps, right, is what I classify as an A+ setup. These give you the conviction that you need to take the trade with the amount of risk that you're supposed to take the trade with. You shouldn't have to question yourself. If you follow everything here and you take a position, it's well within the system. Okay, so make sure you are following this right here. Okay, and then never force a trade, right? We're waiting for what we see. Do not force a trade, right? When it comes to this phase one, this is our major. This is what we are really looking for, okay? This is the major. These are minors, right? Okay, this won't really be used as much. I just have to draw it for you and show it to you, right? But this right here, and then this is also going to be your friend when there's not a lot of trade volumes, right? Or there's not a lot of direction in the market. This will give you a quick time direction, but you have to follow it exactly how I showed you in these videos, okay? Yeah, so make sure you're journaling everything when it comes to not just your the actual trade playing out, whether you win or lose, but the reasons you took the trade, the confluences you see, the emotions you felt, what got you into the trade, right? And protect your psychology as well as your capital. So protecting your capital is important, but protecting your mindset is also important. There's two things that's going to keep you unprofitable, and that is literally going to be taking unnecessary losses as well as missing out on winning trades. Those two things will keep your P&L either stagnant or in the negative. You need to make sure you're capitalizing on the opportunities in the market. That means you're confident, comfortable with taking trades, right? And you got to make sure you're not taking necessary trades, which means you're not going outside of the system. You're not trying to do some other stuff that is not involved in what we're trying to do. Does that make sense? Okay. So, end of story, right? Make sure you practice. Watch these videos multiple times to make sure that you are actually grasping the full concept that's being taught, right? And just like that, it's going to take time. It's going to take discipline. It's going to take courage, right? But once you get all those things together, this is a skill that can change your life, okay? If you need any more help with this, just feel free to reach out to me, right? But make sure we are doing our part, right? Because this is no magic pill. There is no get rich quick scenario, right? You have to put in the work, right? But if you do it all and everything is like not making any sense, reach out to me and I'll see what we can do about that just to get you where you need to go, right? But as long as you run through this and you're actually paying attention, you're actually taking notes, you're actually applying the things you're learning, you're well on your way, okay? Yeah, it was nice talking. Hopefully, you get to work ASAP, right? But the long story short is just you taking that step, right? You've obviously took your first step by just participating in this, understanding and wanting to grow, right? Wanting to make something happen for yourself, right? Kind of like I did when I was 17 and knowing that, hey, a regular life is not the path that I wanted to take. I had to make something happen, right? You're already on that path. It's time to stick to it. It's time to put your head down and grind and accomplish what you want to accomplish, right? It's all going to come back to you. No one can do anything for you. You are the one that has the power to make these changes within yourself, okay? And just like that, I'm going to be signing out. I'll catch y'all on the other side of everything, man. Y'all take care.